Gold ripped
Oh yeah.
higher. I don't want to say got lucky in our timing, but we were we were
We
fortunate
nailed it, kind of.
to hit it right there. That being
Yeah.
said, I still like it a lot in this area. That being said, we could get some sell off. I mean, but I think that'd be minor, and that's a buy. If it sells off, you buy it.
Oh yeah.
What are your thoughts on gold? And then also, what's interesting to me is gold equities, because if stocks sell off, the equities more than likely will sell off more. But how would you play that?
Uh, Possibly, but gold equities are usually not correlated to S&P or a major market. They have life of their own, highly correlated to the commodity itself. I
Okay.
think if the market crashes, I don't think gold stocks will go down much. I
Yeah.
mean, on the program trading,
Hey, Dennis. Good evening. How's it going, man?
great, Angie. Good to see you as always. How are you?
Doing well. Doing well. Some interesting things going on in the economy and the markets. Give me your thoughts.
Well, let's talk about the stock market first, I guess. So it started slowly going down back in early August, kind of intensified in September. Now we're in October. And we were talking about it. I got bearish a few weeks ago. And the first projection was on S&P 4,200. That's exactly where we are.
That's where we're at.
Yeah, this morning we were at, I think, 4190, something like that. And I don't think we're done on the downside. We just bounced today a little bit with everything else that's going on. As far as technical picture, we were down 4 days in a row. We bounced today just because the world didn't fall apart. And it's Monday.
Right.
So, hey, let's bounce. Well, but the bounce was anemic. And what I saw is, again, the seven stocks were up. The usual suspects, Magnificent Seven, as they call them. Advanced decline line was over 1,000 stocks, more decliners than advancers. So it's just a little bounce today, tomorrow, something like that. Uh, I think we're going lower. We talked about fixed income bonds, treasuries, and
Hold on a second. We don't mind me,
Mhm.
and I'm not specifically trying to give ourselves a pat on the back, but 2 weeks
Uh,
ago when we last talked, we said if it's going to sell off, it needs to sell off right now. And that's what happened. It sold off.
yeah,
I think we said about a five, maybe between a five. Well, I don't know what the exact percentage was, but it was good enough, if you would. It
right.
wasn't heavy extreme selling yet, but it looks like the start of selling. So that's interesting to me. But go ahead.
Yeah, I can show actually share the chart of basic chart of S&P 500 with VIX. Let's see. Let me know if you can see the screen.
Yep.
Okay, so on top you got a chart of SPX, S&P 500, and this is a long-term trend line that you see going from the bottom of I think it was in March of 2000, the COVID sell-off. So, and connecting it to the October of last year, the recent low a year ago. And that line, as you can see, goes to about right now to 4,000. And I think it's a reasonable projection. I think the market is not done going down. I think it's a psychological support as well as a trend line support. And I think that's where we're going. On the bottom of the chart, I'll do it this way. The bottom of the chart is VIX. And the VIX so far got to about 22, 22 and a half, which is really nothing. I mean, usually sell-offs, if you take a look at this bear market that started right here, 2000, beginning of 2002, usually VIX goes to at least 30, at least.
Okay. Yeah.
And it's just not just the last 2 years. I mean, if you look at it as over the last 30 years, it's
Yeah.
the sell-off of this magnitude with everything that's going on in the world. We're not even there yet. So right now, traders and investors are concerned, but they're not fearful and they're not panicking yet. And that's
No,
what I'm
neither.
expecting pretty soon. So
Right.
I think these two things point to more downside.
We're downside. So let me ask you then, and then we'll go into fixed income. If we do get a panic, meaning another 10% drop, would you become bullish then?
It depends. Probably at some point I will, based on indicators, based on technicals and so on. Based on what's going on in the world, I think if we forget technicals for now and talk a little bit of macroeconomics, I'm in the camp that we're going to have a recession soon. And I think the market is trying to price it in right
Yeah.
now. And we have a lot going on. We got a mess in Congress. We got the 2 wars and what's going on in Israel. And that could, it's an unpredictable situation. Um,
You got China and all the saber rattling going on there with Taiwan.
Exactly. So geopolitical stuff is
It's just a mess.
unstable as it's been over the last, 20 years or so. That's just crazy. Now we're going to have fears of more terrorist attacks and some other stuff. Will I become bullish at some point? Yes. At some point, yes. But the market should price in a recession. We got a lot of delinquencies. The economy is still showing okay. Like, for example, the earnings are fine, but earnings backward looking. It's what they say about the future that matters. And right now, one company says everything is fine. The other company says, no, it's not that fine. And we have a lot of earnings this week, most important ones. The market's going to be all over the place. All over the place. We will probably have some huge up day, down days and all that. But overall, the trend will be down. I think traders will sell every rip, every rally, and I'll be one of them. And we'll see what the big companies are telling us about the future, how concerned they are. And if there are problems, then the market's, it's going lower. Look at the banking index. This thing just going to the October lows last year. And it's not good. It's just not good. Right now, it's too early to think about when, for example, me as a trader become more optimistic and more bullish. Right now, I'm bearish.
Right. Well, let's talk about that in the bond yields. Let's talk about fixed income and how the impact it's having on banks. It's hard for me to see them, and we talked about this really last several months. It's hard for me to see them making money in this environment. The 2 years over 5, and again, we talked about that. If that happens, that is not a good sign. And it's especially for the banks, any lending institution.
It is. You're exactly right. And I think we talked a couple of weeks ago, and we're kind of becoming a little bit more bullish on bonds because they were oversold, and they tried. They actually rallied the weekend right after we talked.
Right.
But I think it was more of a flight to safety because of the war.
Yeah.
And then immediately sold off back down, and now they're 10 years at 5%.
5%. Okay. That being said, what was it? Bill Ackerman closed his bond fund, a short position in bonds.
Yeah, I think so. Yeah.
Yeah. And it's hard for me to be negative on bonds here.
Definitely.
With the yields this high and to a slowing economy, especially the 2-year.
Right.
They got to flatten the curve, right?
Right.
Going into a recession. They got to get that part of the curve down.
You're right. I think if the bond traders, especially 2-year, start subscribing to the idea that we are going into recession, they're going to buy those 2 years. So the interest rate of a 2-year will go down. And a 2-year, as we know, very much correlated to what the Fed does.
Right.
So it's going to be the first sign of, okay, at some point, either Janet Yellen or Jerome Powell will start printing. Because without printing, we can do. So as far as bonds are concerned, I think we're bottoming somewhere around here.
Yeah.
Doesn't have to be exactly 5. It could be 5.2, something like that.
Sure.
But it's going to be, if the stock market continues to go down, which I expect, the bond market might become a flight to safety at first, but in general, pricing in uh, worse economy. So for
Yeah.
that, I don't want to be short bonds. Have I bought
Yeah.
them yet? No, but I don't want to be short bonds.
I wouldn't be, that's a good way to put it. I wouldn't want to be short bonds, and I haven't traded this yet,
Mhm.
but the 2-year looks very interesting to me.
Yeah,
You know,
it does. Yeah.
that's what I would say. That's what I would say. Um, so gold ripped
Oh yeah.
higher. I don't want to say got lucky in our timing, but we were we were
We
fortunate
nailed it, kind of.
to get it right there. That being
Yeah.
said, I still like it a lot in this area. That being said, we could get some sell off. I mean, but I think that'd be minor, and that's a buy. If it sells off, you buy it.
Oh yeah.
What are your thoughts on gold? And then also, what's interesting to me is gold equities, because if stocks sell off, the equities more than likely will sell off more. But how would you play that?
Uh, Possibly, but gold equities are usually not correlated to S&P or a major market. They have life of their own, highly correlated to the commodity itself. I
Okay.
think if the market crashes, I don't think gold stocks will go down much. I
Yeah.
mean, on the program trading, yeah, but it's no,
Well, I'm glad you said that, because I think they'll go down, but not much,
not
if
much.
you would. I think trader, what I'm doing in my positioning now, and what I'm positioning for is if then what, meaning I have my core positions in gold,
Mhm.
and which, let's say, assume a scenario where gold just goes to the moon.
Mhm.
I'm good.
Of course,
If gold doesn't and it doesn't go anywhere, I'm good.
I think so.
And if it goes down, and I don't expect them to go down significantly, I'll just pick up my favorite companies cheap. I'll just accumulate.
Yeah,
I think that's the way to play it.
it's actually kind of similar to what we've been talking about crude oil and
Right.
in relation to energy stocks. It's
Right.
sort of the same situation. Right now, gold is very much favored, and not short term because it's what's happening in the world. It's not just. I mean, maybe the first rip higher was based on geopolitics, but
Right.
I think it's the beginning of a new bull trend that regardless what's going to happen in the Middle East and China and Ukraine and all that, I think people are realizing that it's just a valid asset that's been kind of in the doldrums the last several months or so. And I think it's coming back. I'm bullish gold right now. Bullish. I'm bullish.
Yeah.
Short term, I'm bullish long term. So
Yeah.
remember a few months ago, it was kind of like dead weight. So right now I'm bullish. Yeah, it's a very nice trend. Gets overbought. We'll sell off a little. Of course, we get it. But I agree with you completely. So even if the gold doesn't go up, but I do expect it to go much higher. Even if it doesn't, the gold miners and gold equities, I think they're doing fine. They are doing just so.
Yeah. Let me ask. No, let's talk about crude. So with everything going on, and I have a few thoughts, but I want your opinion first. But with everything going on in the world, why isn't crude higher? Is it just expectations of recession and deflation? I mean, why? In your
I think
mind,
it's going to 100. I
you
really
still do.
do.
Yeah, I do too. But I'm just
I mean,
curious about your thoughts.
with two reasons. So one reason is we talked the supply and demand and pure economics and uh, all the reports that come out. I think 100 is written all over it, but that could be a slow process.
Mhm.
But with what's going on in the world, especially Iran would get involved in some way or another. This is an
God
oil
help us. But
producer,
yeah,
and everything goes to hell. And oil will be not at 100, it'll be
150
100
bucks.
150 in a matter of days.
Yeah,
So, and Jerome Powell, there's nothing he can do about that type of inflation.
right.
Crude oil, for example, I'll tell you my positions. For example, in gold, I'm long calls on GLD, so on the gold itself, right? But On the crude oil side, I'm not long crude oil. I'm long crude oil equities, stocks.
Me
Because
too.
yeah, I know, yeah, and
Me
they're
too.
still good and they're still fine and they're still cheap. They're not dirt cheap, but they're still
They're just cheap.
undervalued. And it's
And they pay really
well, yep,
good dividends. I mean, most of them.
dividends are good. I mean, at 90 or 80 or even 70, they make
Cares.
bang.
Take so much money.
Well, I mean, yeah, I like them.
Yeah.
I like them. I roll my calls. I take my profits. I kind of trading them. I'm not short term, like intermediate term, but yeah,
Right.
it's my core position. And I don't even care if the market, the stock market going down. Okay, they'll have a few bad days. Bad
Right.
days, not weeks or months. So
Right.
this is a core position.
You got it. What are your thoughts now? This is what I'm setting myself up for. And I'm interested in what you think. I think there's a huge play in industrial commodities, especially the grains and base metals. A huge play, but not right now.
Mhm.
So what I've been waiting for is and they're already, the equities are super beaten up already, but I think they'll go lower if we have, which we're expecting and predicting as a recession. We think that's written in the cards everywhere. So I'm going to be a nibbler, and I was going to nibble on them this fall, but I'm waiting until the spring. What are your thoughts?
I think you're correct. I think despite some of them or many of them beaten down already, I believe that it's going to get worse before it gets better.
Right.
So me being negative on the stock market, they're going to sell them even more.
Right.
So,
Well, they're
but
not going to go anywhere.
longer term,
Not gonna-
and so maybe it's a good idea. Yeah, not to buy them right this minute today, but wait a couple of months or wait when the market goes down, maybe another 10% or something like that. So when they become dirt cheap, and then gotta start looking forward a year or two and start buying.
Yeah.
So I think you're correct. I'm not sure if it's a spring or maybe it's in 10 days.
Yeah.
The timing of it is, it's difficult to say, but yeah, they should be on everybody's radar screen.
Yeah.
And because if we're going into a recession, even if it's a mild recession, then the demand falls off the cliff, and therefore their earnings are going to be a little bit bad at first, and so on. So they should probably go even lower, but then yeah, they'll start buying. Absolutely.
Yeah. Back up the track. Got it.
Yeah.
Well, what other trades are you looking at, and what else is interesting in you that you're looking at for you in the next couple of weeks? Towards the end of the
Right
week?
now, I'm kind of concentrating on. I'm putting put my short term trader hat, and I'm selling all little rallies in the stock market. I'm doing it throughout options. I do very short term, intermediate term. So as I said, long gold, still on the long side as far as equities, energy only right now. So nothing else. I'm gonna look for more interesting small caps, not just in energy, but what you said in industrials and so on, but lower levels. The next 2 weeks, I'm expecting the market becoming even more psychotic.
Mhm.
So all the news, and we might have days of 2 or 3% up and down. It would not surprise me. So
Right.
that's what I'm trying to trade right now. I'm a short-term trader.
Sure. And that's going to make options very expensive, right?
I
So,
should.
so you should be a seller. Is that how you play it? Selling options or?
Well, I do a lot of spreads, so
Okay.
I don't sell naked options. I mean, naked options, as we said many times, are only good if you want to own the asset.
Right.
So, but if
Right.
you don't, it's a stupid idea that once every 3 years going to kill you. So,
Yeah.
no,
We've known many of the traders that are no longer trading
no longer trading, right? Which is,
and selling naked plus naked calls. Right.
yeah, nothing naked. So I do some calendar spreads. I do some butterflies. It's just vertical sometimes. And if I'm very confident, I'll just buy it. While
Yeah.
right now, VIX is reasonable. Like we said, it's a 20. It's not that bad. If it gets to 30 or 40, then yeah, you don't buy them. So
Yeah.
we have a spread. So,
Right.
that's I've been doing a lot of spreads.
Got it.
All on
Excellent.
the bearish side.
Right.
now. Yeah.
Okay. Well, great. I guess that's for our audience, just sit tight. We're selling the rip. I'm going to be accumulating, adding to my core gold position, both gold and the equities. I'm up to my eyeballs already in energy, and I'm fine. But if you did want to accumulate some energy, I wouldn't blame you buying some in here, especially on a sell off.
Yeah.
And then probably the best trade, and I'm not doing it, but probably the best trade I see that's coming up are the bonds, meaning the 2-year. Buying the 2-year looks interesting to me. So
it's getting close. I got to take a closer look at that, and I take a look at it because I'm so busy with the stock market. So I got to look at it here and say, well, I'm nitpicking. So where should I buy? Where?
Sure. Okay. All right, Dennis, as always, appreciate it.
Yeah, always a pleasure, Andy. Always.
All right. Thanks.
Yep.